Yo, what's going on, guys? Welcome back to another video on the channel. In today's video, we're going to go ahead and do our Sunday technical analysis, look at the futures contracts, do some technical analysis, and then move over to 5 stocks that I'm watching into next week. I want to remind you that these Sunday videos are trade ideas with technical analysis, and just sharing with you my game plan into next week. Of course, I can be totally wrong and a lot of things can change in the market, but I'm sharing my game plan and hopefully you guys can learn from it and hopefully it helps you into the next trading week. One thing that you have to remember coming into next week is there's going to be a lot of companies reporting earnings. We can do a ton of technical analysis, we can find great support and resistance levels, but if a company comes out and reports bad earnings, technicals will not mean anything. So we have to remember that with earnings, you have to be careful taking swing trades through those earnings reports because a lot can change. Expected move, implied volatility crush, and of course, if you think a company is doing well, if the technicals are tracking higher, but they come out with bad news, then it means nothing. So make sure to play it safe around these earnings season. Keep it safe. Focus on risk management, and maybe it's not the best time to be opening up swing trades. So guys, with that said, let's go ahead and jump into this video. Smash that like button, subscribe to the channel for some future videos, and press that bell notification so you know every single time that we post on the channel. So I don't think it would surprise you if I went ahead and said that I think the market is a little bit overextended at this point. Now, even if it is overextended and I believe that, that does not mean that it has to pull back. If you look back at 2020, before January, February, and March, we basically went up the entire year. That just shows that if we are in a bullish trend, if we are in a bullish market, that does not mean that we have to pull back. Now, of course, the pullbacks are nice because it's healthy for the market. It sets up some opportunities for traders. We can try to take those dip buys and look for it to move higher. But right now, the trend is clearly bullish and we have to remain bullish. This is why you guys may have heard this before. Having time in the market is better than trying to time the market. So right now, if you're just owning stocks, being in the market, having the time in the market is clearly the better strategy than trying to go ahead and time the dip, trying to take some, bearish positions, thinking that the market is overextended and trying to be the hero that, sort of sells the bottom, looking for the next 10 to 15% dip. That's a very hard thing to do, and that's not something that I would be actively trying to search for if you are investing in the market. My game plan is to continue to be bullish as long as the trends continue to show me that, and that's why I continue to take bullish positions. So now let's jump into the computer, go over the futures contracts, and then look at a few stocks that I'm watching into next week. So the first thing we're looking at here is the NASDAQ. Right now we're on the daily chart as usual. Green line 100-day, yellow line 50-day, blue line 20-day moving average. One thing that I first see that I sort of just noticed here is this divergence with the volume and the price of the NASDAQ. So if you guys look at the volume bars down here at the bottom, you can sort of see we're making this downward trend here on the volume. We're making lower highs every single week. What you can see with the price of the NASDAQ is it's going higher. So this sort of shows that maybe with these highs that the NASDAQ are making, there's a little bit less buying, a little bit less volume coming into the market. No one wants to buy the top. And I think a lot of investors get scared when the market is at these all-time highs because they don't want to be buying here because they think it may pull back. Maybe this is trying to show us something. Maybe this decrease in volume is showing us that the buyers are starting to dry up and maybe a small correction is coming. 5-7%, nothing that's terrible, nothing that's not unusual, something that can definitely, happen and it would be healthy for the market. So if that happens, it happens. We take opportunity off of it. That's the first thing that I see. Second, we're clearly in this bullish trend. We had that high here around 13.9 just about, and we have broken through that, and now we are comfortably above it. Not too much, about 90 points higher if you take into consideration the futures, which are open right now, which are down about 0.2%. So right now, you can't really do much technical analysis on the NASDAQ to the upside. If we continue to go higher, we're just going to continue to break all-time highs. And there's really no point to say, okay, up here, I think we have resistance. At 14.4, 14.6, I think we find resistance. You can't really do that. It's all-time highs. There's no resistance up there. All we can really look at is what is support to the downside. So we have the 20, the 50, and 100-day that we've tested in the past and found a lot of support at. I don't expect us to fall back to the 100-day again. I think those days are over. This was about a 12% drop. So for us to drop back to the 100-day moving average, we would need to see a 10 to 12% drop in the market. I don't expect that. Can we get a pullback to some of these recent highs? That is definitely potential. Maybe the 20-day moving average, which is right around 13.5, maybe that is where we find some support. What you really have to do when you look at a chart like this, which is at all-time highs, and really on the daily chart it's just straight up, is we got to go down to some lower time frames. So we're going to go down to the 1-hour chart here on the NASDAQ. And some levels that I've been eyeing over the last few weeks are these levels that I'm about to show you. So the first one is right here around 13.8, 13.850, all in that range right here. So I'm actually going to make this a little bit of a range. Right here, you can see that we consolidated for a few days and ended up finding support and bouncing off of it. So if the NASDAQ pulls back, I definitely want to see us hold first in this range, in this support range, right around 13.8 to 13.850. That would be the first level. The second one is this consolidation back here. So you have this consolidation around 13.6. Right there would be the second. So you can see we've sort of been stair-stepping higher on this NASDAQ. You don't want to see it break these stairs to the downside. 13.8, 13.6, and then right here, another consolidation zone right around 13.4. So these are consolidation zones that we've been stepping up higher off of over the last few weeks. So those are some levels that you want to watch to the downside. The resistance at this point is clearly right here around 14,000. You can see we hit it here on Wednesday, came back to it on Thursday, rejected it, came back to it again on Friday, rejected it once again. So 14,000, 14,030, right around this area is clear resistance when you break it down to the hourly chart. The NASDAQ, it's in an uptrend. You have resistance right now, not very strong resistance to the upside, and you have some really nice support levels down here. We have to see where it ends up. Some of these key levels you don't want to see break, but at this point, it's very difficult to know where we're going to end up. Next week, we have to see if there's tech rotation. Maybe we get a movement out of tech because of how overvalued it is right now, and get some movement back into the Dow and the S&P. Maybe we see that. That is really what I've been watching on a daily basis. On the chart over here, which is the vertical screen on my computer, I have the NASDAQ and I have the Dow up at all times. And during the day, you can start to see some rotation. On Friday, the Dow was very strong. On Friday, the NASDAQ was weak. So we definitely had some movement out of tech into those Dow stocks. That's really what you should be watching right now. So the next one is going to be the Dow. So the Dow is also very straight up in a very bullish uptrend. 20-day moving average is really what I'm waiting for. Right here, you guys have seen this multiple times on my channel, looking for a test back to that 20-day. If we get it, there's going to be some huge opportunity. But right now, clear uptrend. We're making new highs every single day on the Dow, and that's been helping a lot of Dow stocks like Home Depot, Caterpillar, Boeing, not so much. It's been relatively weak. UNH has been a big one. So some of these Dow stocks have been very strong because look at the Dow. It's continuously going higher. Not much to really chart out here. We just have to see when we start to lose momentum. If we do, let's see if we find support at the 20-day. Finally is the SPY, so /ES. /ES is the most overextended past the 20-day right now. So we're just about 3% over the 20-day moving average. In the past, we have grinded on that line multiple times. As you can see, we have this clear overextension to the 20-day, and eventually I think we can pull back to it. Can it happen next week? I don't know. Should it happen next week? I don't know either. But we need to see a pullback to the 20-day at some point if this market wants to stay healthy and not become overextended. We see the same thing here on the ES that we see on the NASDAQ. A decreasing volume while the price is going higher. That is, bearish divergence. So we have the price going higher, we have the volume going lower, meaning that buyers may be starting to dry up here. So next week, I think will be crucial. We'll see what happens. All three indexes are very bullish still, so I continue to be bullish, but I am being aware of where we are and the potential of a pullback in the near future. All right, guys, so the first stock that I'm watching next week is Square. Now, I'm looking for Square to pull back to about $250 a share. The reason I want to see that pullback is because it would be a break and retest, a strategy that some traders like to look at. A break of resistance, a retest of that resistance, and a bounce off of it. Here is an example right here. So 250 is clearly previous resistance that we were able to break through. We had a bunch of times where we failed that 250 right around here in early March. We broke through it over the last week, and now we're pulling back. I want to see, can we find support at 250 once again, and then get a bullish move off of it, something like this. That is what I want to look for. Can we get that bounce off of 250? That would be the most bullish case for Square. Of course, we need tech to hold up for that to happen. If the NASDAQ dips 5, 6, 7% next week or over the next few weeks, there is no way that Square will hold that 250 level. If tech holds up, then I would love to see Square bounce there. It found resistance at this previous high, somewhat of a double top here at all-time highs on Square, so something to be aware of. But right now, I'm staying patient. I'm waiting for this pullback on Square to 250. If we don't get that hold, we have the 50-day moving average below. If we get that hold and tech starts to heat up once again, I would definitely be looking at Square contracts, maybe June or July contracts, trying to ride Square back towards those highs. We do have to be aware. We have earnings right here on the 6th, I believe. Right there, yep. So May 6th is earnings. So we do have to be aware of that. Maybe we let this play work out for the next few weeks, let it dip, let it find support. After earnings, we try to play continuation. Square, next week, 250 support is what I'm watching. The next stock that I'm watching into next week is Snapchat. Snapchat had a very nice breakout of this downtrend back in the beginning of April. Very similar to Square, if you guys watched that. We had a breakthrough of that breakout, breakthrough of that downtrend, and we found resistance once again at 65. This is clearly a very difficult level for Snapchat. 1, 2, 3 times triple top here at 65 on Snapchat. Now I want to see, can we break through it? Earnings are coming up next week on the 22nd of April, so I'm going to wait after this earnings to see what happens. If we get a pullback on earnings, this will definitely be a good opportunity. Maybe we pull back to the 20 or 100-day moving average, or even if we pull all the way back to this $48 level, that would prove that we are in this range right now on Square, and maybe we get a move back to this 48 and try to get a move back up to 65. That would be ideal. If we get a very bullish move on earnings, break through 65, then I think we are clear to all-time highs. So this 65 level, I'm not bullish or bearish. I'm just pointing it out as a very crucial level on Snap and one that I would be watching. Number 3 is Airbnb, a stock that I think some people may have forgotten about because it's been in a downtrend for about 2 months now. Airbnb is sitting at a very strong support level. I don't want to say very strong because it's a recent IPO, so maybe it's not the strongest, but we definitely have support here around 171, 172. We had a previous high near the IPO, and we have 3 times that it has bounced off that level. Right now, we are making somewhat of an uptrend if you include these wicks on Airbnb. So we are on that uptrend, and we're coming to 172, where we have previous support. If we can get a bounce off of this, I definitely think Airbnb can see a move back towards this 190 level. So we're in this little bit of an ascending triangle. I want to see, can we get support and move back to 192? Now, we should note Airbnb is a pretty volatile stock, and it's very difficult to trade this type of stock. I do like this support at 172, and I do want to see if it can find some bullish momentum off of this triple bottom here, previous support from back in the IPOs, and this uptrend that we're currently on. Let's see if we can find some bullish momentum. We do have this green daily candle that we do have back on the 16th, which was Friday. If we can get another daily candle green up above the 20-day, then I think this play gets a little bit more valid. I'm watching Airbnb, looking to see if it can break out of this downtrend as well. So we have this downtrend that is a little bit higher than the current price. So right around here, we have this downtrend. Can we break above it? That would be ultimately the very bullish move. But right now, we do have support, or we do have resistance right around 192 right here. Let me go ahead and delete this line to make this a little bit cleaner for you. But right there, you have that wedge that we're currently in. If we can get a break above 192, this previous resistance, then I want to see a break above this wedge. That would be the ultimate bull case there. Right now, what we want to see is a hold of this 172 area, hold that support, break above the 20-day, and move higher. Airbnb is the third one that I'm watching. Number 4 here is NVAX. Now, NVAX, a biotech, so there's going to be a lot of news that comes out about this stock. Very difficult to play biotechs because of all the headline risk. But right now, just looking at technicals, we broke out of this downtrend. We are starting to move higher on the daily chart. For the last 3 days, we have held above this downtrend. We broke the 50-day, and I think the next test is going to be 240. So maybe if we get some bullish movement on Monday, you can trade this up to 240. Let's see how it performs right around this resistance. If it can break through, then maybe we have some more upside just looking at the technicals here. If you're trading the stock, be aware of the news that may come out about it, about the virus, about some of the stuff they're working on. So be careful on the biotech, but technically it looks good. It broke this downtrend, and I'm definitely watching to see if we can get to 240 next week. So the fifth and final stock is ROKU. ROKU, traditionally a very strong stock that has been a little bit beat down after that tech weakness that we saw in February and beginning of March. We had that big fall, just about pretty big. I think it was just about 40%. So very big dip on a stock like ROKU. We're starting to find some bullish momentum. We broke above 370, which was a crucial breakout here around this 370 to 375 level. What we're doing right now is a break and retest similar to Square. We broke that 375, 380 area. We are now pulling back and trying to find support at it. So if we can find support here at this previous resistance that is now turning into support, I say that because this was resistance here. Now we're trying to turn it into support here. If we can turn this into support, break back above the 50-day moving average, which is right around 382, then maybe we can get a move up back to this 420 area. I want to see the support. I want to see a bullish movement off the support, find some buyers, and move back higher. A break and retest in a bullish market is a great strategy. ROKU is going to be dependent on where the NASDAQ goes, where tech goes next week. If tech is weak, ROKU will not hold 380. It will fall back lower. If tech is strong, definitely watch ROKU for a strong move here above this little pivot line and back up to 420. Break and retest is the strategy that I'm watching here on ROKU, looking for bullish momentum on tech and trying to capitalize on this support. So guys, those are the 5 stocks that I'm watching into next week. There's a lot of stuff going on in the market, especially earnings coming up. Earnings are going to move the market very much. If we have strong tech earnings, then we'll definitely get some movement on tech. If they come out weak, you better expect some fall in the market. We are at a very high point in the market, and there's going to be high expectations for these tech companies if they want to hold these valuations. So make sure to look at the earnings calendar coming into next week before you're trading any of these stocks, before you're opening up swing trades, because you don't want to be caught in the situation of trying to decide if you want to hold through earnings, if you have a very good trade on. I personally am not going to be holding swing trades through earnings. That is not something that I like to do because I've learned the hard way of expected move and implied volatility crush. I've learned the hard way, and I do not want to deal with that anymore. So guys, I hope you enjoyed today's video. Watch out for earnings coming up. Watch out for how far the market is overextended. Play it safe as always. This is your reminder to focus on risk management coming into the next week. Hope you guys enjoyed the video. If you did, smash that like button, subscribe to the channel for some future videos, press that bell notification, and of course, if you want to trade with me live every day, check out the first link in the description below. That is going to be my Discord chat. Have a great rest of your weekend, guys, and I hope to see you in the next video. Peace.